Hey guys, you're welcome to my YouTube channel. If you're new to this channel, kindly hit the subscribe button and turn on the notification bell to be notified whenever I drop any video. Also, if you're an existing viewer, you're welcome back to this video. In this video, I quickly want to give a detailed explanation on the question, what works on synthetic? I've heard the question a lot of times. I've read the questions on different platforms. People asking what works on synthetic, what concept works on synthetic, and that is what I want to answer in this video and give a detailed explanation to in this video so that you can know what to do in the market. You don't just trade anyhow concept and you expect the market to follow your direction. Okay, now when we talk about concepts, we are talking about the retail concept, which involves the use of trend lines, the use of support and resistance, the use of indicators to trade. That is for the retail concept. We can talk about ICT, we can talk about SMC, which is the advanced concept of trading the financial markets without using the support and resistance, without using indicators. Here you will use liquidity, you will use break of structure, to define your concept, to define what is happening in the market. Okay, that is for the ICT and the SMC. And some people use Y curve. Okay, some people use this Y curve to determine what happens in the market. Now, one thing I want you to understand is that the synthetic market is actually a mimic of the real financial market. It is a mimic of the real financial market. It does not have the same move as currency pairs. Let me just use currency pairs. We have currency pairs, we have stocks, and then we have these indices, also the US 30, the US oil, and the likes. But the synthetic market is a little bit different. In fact, if it's a mimic, it's at least a little bit different from the movement of the real market. And that is why a lot of people loses their money, because they feel the concept that works on currency pair should also work on synthetic markets, which is not going to be so. Okay, there will be a little tweak in the market on synthetic market. There will be a little tweak when it comes to trading the synthetic market. It won't be same as the currency pair market. Also, all of these concepts were gotten from currency pair market, stocks. Okay, all of these concepts were gotten from the currency pair market and stocks. So you don't expect those concepts to also work perfectly on the synthetic market. You don't expect those concepts to also work perfectly on the synthetic market, because all those strategies were gotten from this currency pair. Yeah, it was gotten from the currency pair, it was gotten from the stocks trading. So you don't expect everything to also work perfectly here. There will be a little tweak in the market, and that is why you need to know what works on synthetic. You don't just trade anyhow market. A lot of people will just use that same concept they use for currency pair, they will bring it to synthetic markets, they will make profit for a while, and at the end of the day they don't make profit again. The profit is not consistent. And what you want as a trader is consistent profit. You don't just want a one-time profit and then you are not making any profit again. As a trader, you want consistent profit. But all of these concepts, if you bring it to the synthetic market, you can get confused at the end of the day, because the market might prove you wrong. This synthetic market might prove you wrong. For instance, we have volatility 25 index, we have volatility 10 index, of which the tick is always every 2 seconds. The tick is always every 2 seconds. And then we have other instruments, which is the likes of 100 1 25 1 50 1. The tick is always 1 second. That is, it always ticks every 1 second. So you need to know what works on the synthetic market. So what works on the synthetic market? The only thing that works on the synthetic market, the only concept that works on the synthetic market is your personal concept. It is your personal concept, okay? Now, when you start using other people's concepts, when you start using other people's concept to determine what happens on the synthetic market, you will notice as time goes on, you might be making profits for the first time, but as time goes on, the market changes. The market will change, and then it's going to prove you totally wrong. You will feel this concept does not work again, or something is wrong with the concept, or it doesn't even work at all on the synthetic market. Now, when you take your time to study that concept and tweak it in a way that is suitable to your own strategy, it is going to really work. Now, one thing I want you to know before I continue with how to develop your own strategy, one thing you need to know is you cannot be so good enough that you are going to determine all the moves of the market. If you are someone that trades anything in the market, you see this, you trade it, you see this, you trade it, you have to stop, and then you have to correct your mindset, because you cannot predict every move of the market. You really need just one strategy that has occurred often on the synthetic market, that you can use in trading the market, such that when you see that kind of footprint in the market, you will be able to get into the market flawlessly. You will be able to get into the market confidently. Once you are able to study that particular move in the market, and then you see that it works on different occasions, that is when you know that yes, you have your own strategy. And then when you see this kind of footprint, you will be able to get into the market without so much stress. So how do you develop your own personal strategy? Developing your own personal strategy is not as hard as people makes it look like. It's not that you just have to start digging from what happened from the weekly time frame, what happened from the beginning of the chart, what happened or something. No, developing your own strategy is very easy. Now, all you just have to do is get like an hour a day, maybe 1 hour in a day, and check for a footprint in the market. Now, what I mean by footprint is this: if you trade break of market structure, which is also part of the ICT concept, if you trade break of market structure, liquidity and the likes, now it is that same concept you will tweak to suit into your own. If you are trading break of structure, so let's take for instance, okay, this is a break of structure. I saw something beautiful on 101 Hz, and I'm going to show you guys on the 1 hour time frame. There was something that happened on V101 Hz, okay, on this 1 hour time frame. It was the 4 hours time frame, not 1 hour. You know, when you see something like this, just develop your own strategy. It is very easy as that. Now, on this 4 hours time frame, you will notice we had break of structure to the upside. I'm talking about people that trade break of structure. Now, any of the concepts you use, just follow it in this manner. You will be able to develop your own strategy. So we have a break of structure to the upside, and we are expecting the market to come back into this range to give us our higher low. Okay, we're expecting the market to come into this place to give us our higher low. And if you've been watching my video, I spoke about primary inducement, secondary inducement. I'm going to drop the link in the description box also. So this is our primary inducement. So when markets come here to make a higher low, when market comes into that place to make a higher low, you're waiting for a confirmation. Now, this market did give us a confirmation. It gave us a confirmation for us to start looking for a buy move, and this was the confirmation. Check the confirmation here. It gave us a break of structure to the upside. Now, ICT concept will tell you to start looking for a buy move from this end, to start looking for a buy move when it gives you another higher low, or when it comes into this structure. It will tell you to start looking for a buy move. Now, on this synthetic market, once you are able to discover what happened at this point that made the market reverse to the downside, because according to the concept, you are supposed to be looking for a buy, but here the market gave you a sell move. Now, the questions you need to be asking yourself is, what happened on the higher time frame that made this market reverse from this end? What happened on this particular time frame, which is a 4 hours time frame, that made this particular market reverse from this end? You can go to lower time frame and check what happened. Now, if you are able to discover what happened, if you have an answer to your question, or you feel the market actually did it because of this, now start looking for that kind of move. Start looking for that footprint on other time frame, on other time frame, on other instruments, okay, on other instruments, or on this particular instrument, but make sure you are seeing it from different occasions. You are seeing it on different occasions. You are looking at the market. You are looking at what happened, okay? You are looking at what happened in the market, and then you are trying to get if such thing has occurred before. If it has occurred before, now you will start checking it. Okay, so this is what happened. This is what the market does when it wants to reverse. This is what the market will do when it wants to get to PO high. This is what the market will do when it wants to get to this point. And another way to develop your own strategy is you can come to the market and check, okay, on this higher time frame when we wanted to reverse, what happened? Now, once you are asking yourself those questions, you won't rely on the concepts. You won't rely on those concepts that, okay, it's going to work. Those concepts will work. Let me just put it this way. This concept says when market gets here, you should do this. No, you are not acting based on the general opinion. You are acting based on your own opinion. Okay, the market actually did this because of this. And it can only come from you consistently asking what happened. Why did the market reverse here? And not blaming the market for giving you losses. Once you are able to develop all of this strategy, you will have to write them down, okay? You need to write all of these things, all your discoveries. You need to write them down. Don't just feel, okay? Don't just get information and then you feel you are going to stop it up in your head. No, you have to write it down. Get a journal, write it down, get a book, or you should use a Telegram chat, create a Telegram group for yourself, and then be sending all of this information into that Telegram channel. All of these things are going to help you. It's going to help you build your own personal strategy towards the market, and it's going to help you know your own bias towards the market. You are not acting based on general opinion, so you have to know what happened in the market. Get to ask yourself questions. Why did the market reverse from this point? Okay, the market did not follow my rule here. Why did it happen? Ask yourself those questions. It is only your own strategy that can work on the synthetic market. If you are basing it on, if you base your concept on the general concept, if you base it on the general concept, I hope you know these big guys also know about all of these strategies, and they will make sure that it causes you to lose. They know where people takes advantage of a buy move or a sell move. They know where you are willing to buy. They know where you are willing to sell. Now, when they get to where you are willing to buy, they trick you in. You get into the market and they dump it on you. So if you want to buy, they make sure that they get to where you are willing to buy. They get to where you are willing to buy, and they make sure that you buy that market with all these all this confirmation that they are always talking about. All this confirmation that when you see this candlestick, it simply means the market is about to buy. It simply means the market is about to sell. They make sure they trick you in with those things. Once they trick you into the market and you buy the market, they dump it back on you. And you notice that the market keeps eating your stop loss. You keep entering the market, it keeps eating your stop loss. Now you have to change bias. You have to change bias. You don't have to trade according to the general public concept. You have to trade according to your own concept, what works in the market, especially on this synthetic market. If you want to trade based on general opinion, trust me, it's going to be very hard to be profitable in this market, in this synthetic market. It's going to be a little bit hard for you to get to be profitable. But when you are trading based on your bias, you are trading based on what you are seeing in the market, based on the answers to your question, then you are good to go. Also, don't trade too many instruments. Just study the footprint of a particular instrument. Study the footprint of a particular instrument, and that is it for you. So guys, I hope you've learned one or two things. If you have a question, drop it in the comment section. I'm going to take time to read them and answer the questions. I'm going to see you guys in the next video. Have a lovely trading week ahead and keep living in the atmosphere of profits. Bye guys.